Get out, get out, get out of Illinois right now. Right now. Get up, pack up and move. Just leave. This is nuts, man. So let's check this out. 12 things to know about Illinois' fair tax. From Tax Foundation. This report was originally published on 2019 based on the information of the governor's office, which was delivered on 2019. The report has been updated to reflect the rates as adopted in Public Act 101-0008, which will take effect if a constitutional amendment is approved by voters on election day. Key findings. Governor Pritzker has proposed sweeping changes to the Illinois tax code, advocating a constitutional amendment to permit a graduated rate income tax, proposing a new rate and bracket structure. In 2019, the General Assembly passed a joint resolution referring a constitutional amendment to the November ballot that would allow a graduated rate income tax structure. So if you pass it, Illinois, you're doomed. In 2019, a law was enacted establishing new individual and corporate income tax rates that would take effect next year. Should it be ratified by voters. Under the new law, corporate income tax would be at 10.49, which would become the second highest tax in the nation. While pass-through business income tax would be taxed at a top rate of 9.49, the sixth highest such in the nation. All you're doing is penalizing sole proprietors, LLCs, S corporations, and just businesses generally. Nuts. The proposal diverges sharply from ideal or even typical income tax structure. It omits inflation indexing, resulting in bracket creep, which is that right there just freaking infuriates me. Creates a marriage penalty. It includes a recapture provision, which subjects the entirety of a taxpayer's income tax to the top marginal rate once they reach that bracket. That's infuriating. So if you go $1 into the next bracket, you are paying the top marginal rate on the very first penny you made. The neighboring states of Indiana, Iowa, Kentucky, Missouri have all cut income taxes in recent years, while Illinois may be headed in the opposite direction. The enacted tax rates are merely a starting point. Should voters permit a graduated rate income tax, there are compelling reasons to believe that taxes may climb even higher and that more taxpayers will be subject to higher rates. Were the proposed implemented, Illinois is projected to climb from 36th to 47th on the state business tax climate. Crazy, man. Do we have a poll on this? I don't know. Where the state voters, are they down with us? This is nuts. In a state which taxes tend to be high, this constitutional provision has been crucial to keeping one tax, the individual income tax, highly competitive, because there are practical and political limits on just how high rate it can go when it's applied uniformly. The constitutional amendment that the stupid governor is proposing, the Fair Tax Amendment, would change all that, and under the rates that brackets that were proactively adopted by the legislature. Illinois would have some of the country's highest income taxes, individual and corporate, particularly on businesses. That's a particular concern in a state that struggled to stem the tide of business departures, as the governor himself has noted, as he was traveling. Where did he go? He went to Michigan, right? And then he also went down to Florida, too, while he's telling everybody else to stay in place. 10.49% combined on corporate income, 9.49% on pass-through is crazy. It is important to note that the proposed rates and brackets as enacted are separate from the actual constitutional amendment on which Illinois residents will vote. The amendment, which was referred to in the November ballot with the passage of the joint resolution, simply lifts the Constitution's prohibition on a graduated rate income tax, leaving this and subsequent legislatures to adopt rates whatever they want. That's crazy. Under this law, the current 4.95% flat tax would be transformed into a 6 tax rate, with ranges ranging from 4.75 to 7.99. A recapture provision means that filers with income in the tax bracket will have their entire income, not just their marginal rate, subject to the top rate of 7.99. Meanwhile, the base corporate rate will go from 7 to 7.99, 10.49% counting the personal property replacement tax. The whole thing's nuts. Get out. I'll put the proposal would create some of the highest rates in the country. It's just nuts. Get out now, because this is just beginning. They're just headed for a disaster. They're hoping for a bailout from Sniffy Joe. If there's a bailout for insanely run states like this from the good taxpayers and well-run states, There should be pitchforks. All right, we'll see you.